This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks struggling for direction as investors weigh a sell-off in the world's biggest tech firms that dragged global stocks to a one-month low. And US President Donald Trump is formally designating Saudi Arabia as a major non-NATO ally as the two countries look to strengthen ties. And we are live at Bloomberg's New Economy Forum in Singapore, where we'll be speaking exclusively to Goldman Sachs President and Chief Operating Officer, John Waldron. Well, it's just gone 9 a.m. across the Emirates, 7 a.m. here in South Africa. I'm Lizzie Burden in Johannesburg, in for Jemana Basetchi. A very good morning to you. Checking in on these markets, and they are treading water this morning. We have futures pointing south on both sides of the Atlantic, but only just. We've seen some modest losses already in the Asian session. We're pretty steady on the 10-year in the US bond space, and Bitcoin is back above the $90,000 a token level. But if we flip the board over, the reason that traders are on edge is, of course, they're holding their breath for those Nvidia earnings. And we have got a fantastic chart showing you really the past sales from Nvidia with updated estimates for the current quarter. Nvidia at this point pretty much a macro moment for these markets, and data center revenue, of course, in focus. So we await those earnings from Nvidia later on today. But let's zoom in on how Asia markets are faring right now. Min Min Lo is in our Hong Kong studio with more. Min Min.
Hey, Lizzie, we are seeing a pullback across Asian markets, and we are seeing things firmly in the red right now. The Nikkei has given up earlier gains, now down 0.1%, and I think it was just a few minutes ago that the news broke that China is now reimposing the seafood ban on Japan. That diplomatic spat between the two sides taking a turn for the worse here. The Hang Seng also down 0.3%. The Kospi and the TAIEX all pointing down. We had, of course, the sell-off overnight with the Mag 7, right, in the run-up to Nvidia's earnings. There continues to be an increasing chorus of voices calling into question the sustainability of AI spending, and this sector really taking a beating today. We flip the board and take a look at what's happening in the currency space, because here we can see the yen continuing to be on the weaker end of things. We did have a panelist advising the Prime Minister, saying that the BOJ is unlikely to hike rates until March of next year. The BOJ, the currency pretty much taking this in stride. I think a lot of that weakness already priced into the markets. But take a look at the won. We are, it's weakening by 0.3% against the dollar. And BI, our Bloomberg intelligence analyst, is saying that the won above 1,400 is now the new normal. It's no longer the red flag. And it just goes to show you how much pressure the market is under, especially with the selling pressure on the Korean equities, especially from foreign investors as well. But Goldman Sachs, however, saying that the sell-off that we are seeing in the Korean won rates market, that is perhaps a little bit overextended at the moment. Lizzie.
Great stuff, Min Min. We'll see you on later in the hour. Min Min Lo in Hong Kong. Well, as she says, cautious trading this morning across Asian markets as investors brace for those critical earnings from Nvidia. JP Morgan Vice Chairman Daniel Pinto, speaking on a Bloomberg panel here in Johannesburg, has warned that concerns over AI's rich valuations may trigger broader market losses.
It's possible there is probably a correction there. And that correction will also create a correction in the rest of the segments in the S&P and in the industry, because you are probably, in order to justify these valuations, you are considering a level of productivity that it will happen, but it may not happen as fast as the market is pricing.
So that's Daniel Pinto's view. But today at the Bloomberg New Economy Forum, we've heard a little more of a positive view on the global sell-off from Bob Diamond, founding partner, of course, and CEO at Atlas Merchant Capital.
We've seen risk assets be repriced. In my sense, this is a healthy correction, not something that's turning into a bear market.
So, two opposing views there. Let's call the ref, shall we? Garfield Reynolds, who leads our MLive Asia coverage out of Sydney, joins me now. Good morning to you, Garfield. How make or break could these Nvidia earnings be for US stocks? Could they really turn this pullback into the end of the AI bubble?
Well, that would be a pretty big ask. And I suspect that they won't, even if they come in poorly, there's still enough capex that's being committed. We've had another couple of $15 billion deals flagged when it comes to AI. There's a lot of demand. Even if Nvidia says that it missed, I'm sure chances are we'll get Jensen Huang again, pushing the idea that demand is massive and that it's still coming. So it would be, I think, a shock if they were bad enough in and of themselves to set off that sort of a move. And in general, I tend to lean towards Mr. Diamond in that this is not the sort of setup at the moment that really says the AI bubble is about to pop, that we're about to head into a bear market. What is happening is there have been a lot of concerns about the overvaluations seen in a range of areas of the market. There's angst that over the longer term, all of this is not going to be justified. And then you have the lack of clarity when it comes to sort of both where the US government is going and, more importantly, where the Fed is going. So up until a couple of months ago, investors seemed to not be too worried about political and monetary policy uncertainty because they were certain that AI would lift all boats. Now they're starting to realize that at some stage the AI bubble will burst. They just need to find some reassurance that it's not going to burst anytime soon. And I would emphasize, I'm not seeing anything out there that says it is about to burst.
Well, let's see what Jensen Huang has to say over the next 24 hours. Bloomberg's Garfield Reynolds, we thank you so much. Well, turning to the geopolitics now, US President Donald Trump has given Saudi Arabia's Crown Prince Mohammed bin Salman a lavish reception in Washington, offering a defense agreement that includes cutting-edge warplanes and absolving him of the murder of an American journalist. Trump also designated Saudi Arabia as a major non-NATO ally, while the two countries signed a loosely worded defence cooperation pact, with the Saudis promising to invest as much as $1 trillion in the United States.
I'm pleased to announce that we're taking our military cooperation to even greater heights by formally designating Saudi Arabia as a major non-NATO ally.
Well, joining me now is someone who knows this relationship well, Robert Jordan, former US ambassador to Saudi Arabia. Ambassador, so good to have you with us on the programme this morning. I wonder, who got more out of this trip, Donald Trump or MBS?
Well, I think MBS clearly gotten the most out of this because he has secured F-35s at supposedly the same level that the Israelis now have, which eliminates the previous standard of a qualitative military edge for the Israelis. We'll see if that really holds up. He's also got the major non-NATO ally status. He's got a defense agreement that is robust. And I think he has also got President Trump's ear on toning things down with Iran, all of which would be very welcome to him. And what did he have to give up? Virtually nothing, because he still has in his pocket the promise or the lure of normalizing relations with Israel. So it seems to me that MBS has come out by far the winner here.
Well, yes, will it harm the US-Israel relationships that Washington's now selling F-35s to Riyadh?
Well, I think this is part of the penance that Prime Minister Netanyahu has to pay for his unwillingness to pursue a two-state solution. This is, I think it's become obvious that that two-state solution is some distance off, and my guess is the Trump administration decided they might as well cut their exposure to that right now by going ahead with these other deals. In a way, you could say this is a down payment on a normalization plan later on, hopefully having bought the goodwill of MBS in the process.
But what about the risk that those F-35s end up in hostile hands, a risk that the former US Vice President Mike Pence flagged to Bloomberg just yesterday?
Well, there's always that risk. I think one thing we have to bear in mind is the Saudis are a consequential player in the Middle East, someone we have an important relationship with. There are ways, I think, to meter out the sale of the F-35s. This is a multi-year process. Probably could be 7 years before they actually even see the aircraft. So there's a lot of play in the joints here. I think there are opportunities to tweak it if there becomes an issue. The greater issue, I think, is whether, because the Saudis have cordial relations with China, China might have access to some of the technology of the F-35s, which is something we really would not want to have happen.
Exactly, and that appears to be the fear here. Just on the investment pledge, this $3 trillion Saudi investment pledge, how likely do you think it is to actually materialize?
I think it's perhaps an overstatement to say $3 trillion. The Saudis' economy right now is not as robust as it has been. Sure, and the economy is not as robust as it has been. Their debt to GDP ratio has increased somewhat. They need $90 oil in order to make their budget. And so there are strong strains, I think, on the Saudi fiscal side. On the other hand, they do have a massive public investment fund, which has the opportunity to invest. I think a lot of it just depends on how you quantify what the investment is, how productive it is. But I am a little skeptical that it's truly $3 trillion.
Yes, I should have said $1 trillion there, excuse me, Ambassador. But just also on the killing of Jamal Khashoggi and the fact that the president seems to have drawn a line under that, is that simply a case of diplomatic realism on the president's part, or how do you see it? What would George W. Bush, for example, have done under whom you served as ambassador?
First of all, Jamal Khashoggi was a friend of mine. I have been enormously critical of his brutal murder. But I think President Trump did Mohammed bin Salman no favors by intervening in the questioning about that during the press conference today. He treated MBS like a teenage kid and instead should have allowed MBS to make his own response. He seemed clearly prepared to do so and was going to be quite articulate, I think, in expressing his regret at what happened, even though we can all disagree on exactly what he knew and when he knew it. I think it looked to me as if the president was overly protective and in some ways interfered with Mohammed bin Salman's effort to take the stage, the international stage, and show that he, at 40 years old, is a mature leader.
Well, we're incredibly grateful for your analysis this morning. Robert Jordan, former US ambassador to Saudi Arabia, thank you so much for joining us on the programme. Well, Bloomberg's New Economy Forum is happening right now in Singapore, bringing together global leaders to discuss the historic shift in economic power from west to east and north to south. Bloomberg's Francine Lacqua is there with our next guest. Francine.
Thank you so much, Lizzie. And joining us exclusively is John Waldron, President and Chief Operating Officer at Goldman Sachs. John, so good to speak to you. You were just on a panel talking about the U.S. economy. What exactly are you most worried about when you look at the labor market, but inflation as well?
Well, it's nice to be here. Thank you for having me. I would say you're seeing in the markets right now a pullback, which I think is healthy. Markets have run quite a bit this year, U.S. equity markets in particular. Markets heavily focused on this AI dynamic. Are we going to get the returns on capital invested that the market expects and is priced in? It's a big debate. We're going to see the Nvidia earnings later today. That'll be a very important moment for the markets. Second topic, I think, is very much on the minds of investors is labor. We've had government shutdown, which is obviously behind us now, but the statistics will lag and the data will lag. So the market is not quite sure what to make of labor. So I would say labor is a major issue and a major concern. And the third topic, I think, is inflation, which remains pretty stubbornly high. And we obviously saw in the election cycle in the U.S. a lot of focus on affordability. And so I think those three topics are really shaping markets right now. Markets have had a good run, and so you're seeing investors kind of pull back, and I would say protect gains.
Do you think we need more of a correction? Like, when do you know? Or is AI in an actual bubble?
Well, I think we'll find out in Nvidia's earnings today, kind of what they say about their own prospects, which has been a bellwether, and I think will have some impact on the psyche of the marketplace. It strikes me that the market could pull back further from here. I do think that the technicals are kind of more biased for more protection and more downside, more short activity, more macro hedging, and kind of protecting the gains that have been garnered this year. So I think there probably is a bit more bias to the negative, but I don't know that it'll be that much more pronounced from here.
Do you worry about the U.S. economy in 2026?
I really don't. I think the U.S. economy is pretty strong and pretty resilient, and I think there's a lot of stimulative effect. So you have the One Big Beautiful Bill, which has tremendous stimulus as part of that package. You have, I think, still Fed easing bias. We'll see what the Fed does in December, but I think the bias is still to lower rates from here. You have AI investment, which whether the market likes or doesn't like the return dynamics, there's going to be plenty of capital investment, going into the U.S. economy in 2026. So I think those tailwinds, to my mind, are going to outweigh the headwinds of maybe labor weakness, probably more layoffs coming from corporate America. But I think the U.S. consumer continues to spend. Yeah. And the underpinnings are pretty strong with a fair bit of stimulus leading into the midterm elections in the United States, which I think is going to continue to be a driver of fiscal stimulus in the market.
John, it seems that the market has completely moved on from the tariff concerns. Are they right to do so?
I don't think they're right to do so. I think tariffs will be a permanent fixture of the Trump administration in terms of how they're going to demonstrate their own foreign policy and trade policy. And I think the unpredictability of tariffs remain. I do think the general direction of travel of the effective tariff rate is down. So we started in April at a very high universal tariff level. Now we're moving into more exclusions and exemptions. And I think with the affordability picture looming politically, you'll see, I think, a little bit more focus, as you have already seen this week, with bananas and coffee and things that are in the basket being excluded. I expect to see more of that. So I think the effective rate will come down. USMCA will be very important. So we're going to find out in 2026 how we recast that trade agreement, which I think will drive a lot of how the tariff rate evolves over the coming weeks and months.
Going back to AI, I know a lot is riding on those Nvidia earnings, but how do you see a return on investment? At the moment, there's so much, there's like trillions of dollars being spent, and it's unclear what they get back for it.
Yeah, I see this as a significant spike in supply of compute power with a lagging demand curve, as companies like ours and many others around the world try to figure out how we can utilize these tools to become more efficient, serve our clients and customers more effectively, have better analytical capabilities, and so on. And to me, the big long pole in the tent for companies like ours is data and cultural change. So we can't rewire our processes as fast as the technology is moving. So I think it's natural that the demand curve will lag, and the market may not like that gap and may reprice assets, as we're seeing a little bit right now. But generally speaking, I think it's way too early to call whether we're really in a bubble or not. I think that you're going to have to see how companies deploy in the enterprise these tools, which I think is going to come over the next couple of years as this compute power comes online.
What do you do with credit markets right now? I know you've previously remarked that there's been a credit explosion. Does the explosion worry you?
It worries me because anytime you see that much increase in credit formation in a short period of time, you wonder about standards, underwriting standards. And we've seen, in certain examples that have been well reported, standards have come down, terms have weakened, pricing has tightened. And so there is classic late stage behavior going on in credit. But that doesn't mean that we're going to have a credit crisis. It just, frankly, the most important thing is economic fundamentals. If the economy hangs in there, the credit markets will be fine. And I would say you're going to see more credit formation coming in 26 because I think you'll see deregulation in the banking sector, principally in the United States, which will release more capital into the economy and will create more lending in the economy, which probably keeps spreads tighter and probably keeps more supply of credit, which is actually needed because governments are pretty fully levered, and the private sector is going to have to come in and finance a lot of this AI investment, decarbonization, investment in energy and the like. So I think you'll see credit markets continue to be pretty constructive as long as the economy hangs in there.
But what are the real risks, though, that we're not looking at? If you worry about underwriting, then at
subprime. I think there'll be more problem. I predict more problems in subprime. I do think the weakest part of the economy is that lower end consumer, and there has been a lot of lending into the subprime parts of the economy. So I wouldn't be surprised to see more issues arise in the subprime lending arena. We worry a bit about leverage in the equity markets, particularly around wealth investing, levered ETFs and more investing in more levered form as you get asset prices that are rising. I think that extra leverage is concerning. So those are areas that we would be focused on and worried about. But again, economic fundamentals will be the most important thing.
Are you expecting more distressed deal making in that space?
If we have a strong economy in 26, there won't be that much distress. If we have a weaker economy, which we don't expect, you'll see an increase in the distress.
What does it mean for Goldman Sachs? How can you position, if you do have more distressed deals, how can you position yourself to take advantage of that?
We've built a very strong origination capability in talking to companies, whether they're corporates or owned by private equity and other financial owners of those companies. And so our origination capabilities are significant. We understand how to play up and down the capital structure. We can provide capital at the senior level. We can provide hybrid capital. We can provide equity capital. So were we to have a distress cycle, we'll be able to provide fresh capital to recapitalize companies that need help in the balance sheet. And we're very well positioned to do that. And I don't expect that necessarily to be the case in 26. But at some point, we will have a credit cycle, and we'll be prepared to deploy capital into that credit cycle.
John, when you look around the world, what do you worry about the most? Is it a specific country? I know we were talking about the UK and the fact that there's, of course, this budget next week.
Geopolitical fragmentation. I think that the dynamic between the U.S. and China, which we call increasing strategic interdependence. So the countries are interdependent, but there are going to be areas where they're going to be more focused on national security. And because that relationship is getting much more complicated, you're seeing more fragmentation around the world. And so a lot of the conversation here in Singapore this week has been about fragmentation, new regional alliances, redesigning supply chains. I worry about that because it's a new world order. And we don't really know what to expect in that new world order. And I think that will create disruption and pressure in the system, which is kind of unprecedented for the system that we've operated under for quite a long time.
But what does it mean for a big global financial institution like yourselves? Could you see also like parallel, finance networks, or is it just trying to work your way around some of the blocks so that you still service everyone and the cash goes to the right places?
I think it's the uncertainty that it brings into markets and trying to navigate that uncertainty. I think it's difficulty making long-term planning decisions, not really knowing, how things will evolve. And we certainly see that with our clients. Clients have a much harder time making long-term capital decisions, particularly in terms of supply chain, not knowing how that fragmentation will play out. And so as we give clients advice, we have to be increasingly focused on that geopolitical landscape as opposed to just the underlying fundamentals in the economies.
John, do you think there is a lot of cash actually that is just waiting for the geopolitics to settle to be deployed?
Well, there's a lot of cash that's been deployed. I mean, think about the markets this year. M&A up 40%, announced volume up 40%, private equity volumes up 45%. So there's been, equity markets, IPO markets much stronger. So we've seen a lot of deployment of capital this year, and I would expect that to continue in 26 if we have that underlying economic backdrop that we're expecting. It may move around the world in various ways. I think the notion of all this money running out of the United States was declared much too early. I think the United States is a very attractive place for capital. Much of the AI capital spend is going to happen in the United States. You're going to see a lot of private capital come in to finance that. So we see a very buoyant capital deployment opportunity in 26 coming on the back of a very strong 25.
John, thank you so much for joining us. That was, of course, John Waldron, Goldman Sachs president and COO. With that, I'm going to send it back to you, and we'll have plenty more here from Singapore throughout the day.
All right, Francine, thank you so much. That was, of course, Francine Lacqua in Singapore, and we'll be hearing from her, as she says, plenty more throughout the day. Well, we've also been having some fascinating conversations right here in South Africa. The finance minister saying that talks on a trade deal with the US are ongoing. Speaking at the inaugural Bloomberg Africa Business Summit here in Johannesburg, Enoch Godongwana said that discussions are now constructive, adding that Pretoria was revising its submission to Washington. Here's some of what he had to say.
We're negotiating with the USA. We made a substantive submission now, and they've come back and said, no. You've gone too much detail to areas with, it's in the nature of the agreement. They push back on certain areas where we're preparing a new submission. But what does that mean? What that means is that there are negotiations taking place between ourselves and the USA, except that we can't be through the media showing what details of this agreement when we're not negotiating with them in the media.
Do you feel there's been improvement, though, over the past? Is it on specific items? Is it on the negotiation?
Not on specific items, but on the general posture of on the negotiation.
What would you say the current state of relations are between South Africa and the U.S.?
At a formal level, there's absolutely no problem. Except that now and again, we hear what the USA says about genocide and all of those things. As somebody who is now based in South Africa, I'm sure we are speaking to a number of South Africans. There's absolutely no basis for that.
Do you think it is putting a dent on potential investment into the country? Does that concern you?
Yes, the USA is powerful. The USA is powerful because if you deal with a nation which is on their spotlight, you don't know where they are likely to get secondary sanctions. You see what I mean? So no one wants to be on the wrong side. And to that extent, it influences the attitude of investor community towards South Africa.
So that was the South African Finance Minister speaking to Bloomberg's Jennifer Zabasajja at our Africa Business Summit here in Johannesburg. And we are checking in on these markets, looking at futures pointing lower on both sides of the Atlantic. Already seeing losses in the Asian session. This, of course, as we wait for those Nvidia earnings later on. Really, investors holding their breath, waiting to see how these earnings justify the lofty tech valuations that we have been seeing so far. But coming up on the programme, we're going to be checking in on Bloomberg's New Economy Forum. We'll go right back to Singapore to hear from their Minister for Digital Development and Information, what he has to say about the challenges and opportunities posed by AI. That's next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks struggling for direction as investors weigh a sell-off in the world's biggest tech firms that drag global stocks to a one-month low. US President Donald Trump is formally designating Saudi Arabia as a major non-NATO ally as the two countries look to strengthen ties. And we speak to Josephine Teo, Singapore's Minister for Digital Development and Information, live from Bloomberg's New Economy Forum. Well, it's just gone 9:30 a.m. across the Emirates, 7:30 a.m. here in South Africa. I'm Lizzie Burden in Johannesburg in for Jemana Basetchi. A very good morning if you're just joining the programme. Checking in on these markets, and we have futures pointing lower on both sides of the Atlantic following the losses that we've already seen in the Asian session. Treasury yields pretty steady on the 10-year at this point, and we have Bitcoin back above that $90,000 a token level, having dropped below it earlier in the week. Of course, traders are really holding their breath for those Nvidia earnings. And if we flip the board over, you can see past sales and future estimated sales. This is what markets are focused on. It's pretty much a macro moment at this point, these earnings. And actually, that data center revenue is very much the focus here, as you can see in the white on your screen. So we await those earnings. But before that, let's go back to Singapore, where Bloomberg's New Economy Forum is underway. We've got some exciting guests lined up for you from the event, and one of them is with Bloomberg's Haslinda Amin. They join right now.
Hey there, Lizzie. It's been an exciting conversation here at the New Economy Forum. Of course, conversations around AI in particular. With me today, the Singapore Digital Development and Information Minister, Josephine Teo. Minister, good to have you with us. You know, we talk about ensuring equality when it comes to AI access. And some people point to China's model, open source, as a way to ensure that equality. What are your thoughts on open versus closed?
Well, in any economy, if you would like to see widespread adoption, that would eventually have to mean many applications that are built for different functions, different sectors, and different users. So thinking about how these AI applications come to be built, if there were no open source models, open models that developers could rely on, then you could see potentially that this becomes a very big problem. The cost of developing these applications would go up considerably. And what it means is that access to users could become more constrained. And in terms of getting more people to benefit from the technology, that would also be less than potentially possible. So I think there is a place for open models. Is it open source or just open weights? I think you can have a debate about that. But the important point is to say that having open models is essential and quite helpful in terms of getting widespread AI adoption.
Are there concerns about adopting an open model?
If you are an organization with proprietary information, data, knowledge, insights that other people would like to get their hands on, if you are concerned about your AI models being hijacked, I think there is a place for models to be fine-tuned and then kept within the organization. But are there many organizations like that? It would depend. Even within an organization, there will be certain functions, certain aspects of the work that you want to rely only on a closed model, something that only you have, that is fine-tuned on your own data sets, that others cannot access easily. But for other usage, for example, workplace productivity, do you really need to rely on an in-house model, a bespoke model, one that is fine-tuned for your needs? Maybe not necessary.
It is hard to talk about AI without talking about the US versus China, because they're right smack in the center of a tech race and AI race. And Jensen Huang has come out to say that he thinks China is ahead of the game. China could be winning. How are you looking at the race between the two and the implications that we're likely to see even in countries like Singapore?
Well, this contest has been ongoing for many years. And if you look at what China is able to offer, is a breadth and depth of their industries. So in applications, very clearly that they will have many use cases. And these use cases, once they have proven effective use of AI, will be very interesting benchmarks and reference points that other companies elsewhere in the world would also want to look at. Does that mean that they are ahead of the game in every aspect? The AI technology stack has got many different levels. At the applications level, it is entirely possible that China will have an edge. But if you talk about developing the most sophisticated models, and I think today there is also the recognition that it's not just language models, even multimodal models that will be important. There is a shift towards the development of world models. These are models that learn not using textual information, they are using visual information. And it has also been described that these world models respect the laws of physics. So if you look at how AI development is continuing at a very fast clip and in more varied ways, I think the question is still open, who gets to take the lead. But regardless of who's ahead, I think there is room for cooperation. There is room to bring the leaders together, particularly in time to come, to set standards.
Might China win because of its access to energy and power and rare earths? I mean, those are essential when it comes to this tech race.
It will certainly try, and you can't stop it from trying.
The thing about AI is also causing a lot of fear when it comes to jobs. And people point to this paradox, proximity paradox, where the closer you are to AI, the more concerned you are about losing your jobs because you see its abilities. Are you seeing that as you implement the AI strategy in Singapore?
Well, it's kind of interesting. Most of the enterprises and the workers I interacted with, where AI tools have been introduced to their workplaces, the feedback has been largely positive. Yes, they know that this technology is powerful and it can do many things, but they also see where it falls short. And they also see how they continue to be needed as part of the equation. It's been said often enough that what will replace workers is not necessarily AI, but another worker with relevant AI skills. I think that is the realization that more and more people in our workforce have. And there is a healthy attitude towards wanting to learn how to use this technology, how to apply it in the work context, and also how to level up, one's skill sets with this technology.
But it's hard to ignore when you hear companies like Amazon cutting 30,000 jobs and what that might mean for the rest of us.
Well, it is to be empathized with. People can appreciate that a company would always try to see how they can use technology better and rely on people less, and it can be concerning. But I think it is also perhaps not quite right. There could be other factors that cause a company to either expand or to trim. And what's very important, I think, in every economy is the ability to continuously create new and better jobs. And that's the challenge that we set for ourselves.
Minister Teo, always a pleasure to have you with us.
Thank you, Haslinda.
And of course, Lizzie, we're coming to you live from the Bloomberg New Economy Forum, where conversations have revolved around AI and how do you get equal access to that technology? The debate continues.
Yeah, fascinating, if disconcerting conversation. Bloomberg's Haslinda Amin, we thank you so much for bringing it to us. Well, the group CEO of Etihad Airways has been speaking to Bloomberg's Guy Johnson on the sidelines of the Dubai Air Show. He says that the airliner is seeing growing demand in Europe, India and Southeast Asia, but also highlighted some of the constraints around plane deliveries.
We see the premium demand strong in the GCC, in Middle East, in Europe. But of course, right, especially when you talk about the US market, where premium demand is extremely strong right now, there is some influence, right, on what you see in wealth and with stock market appreciation, right? So we're very conscious about that. Our growth actually over the past 2 years have been concentrated in Europe, India, and Southeast Asia. Yep. And these markets, we believe it's a long-term trend that premium is here to stay.
Are you surprised, though, how much money people are spending? Like in India, maybe less here, but also in Europe. Is it? It's extraordinary in some ways.
It is. It is. If I tell you I'm not surprised, I wouldn't be telling the truth. So we were not expecting that to come so quickly. I think the pace is more important than the size of money, right? The pace and actually the amount of people, right, willing to do that. But reality is the following, right? We forget that when you travel abroad and you go for leisure, right, with your family, right, the airfare is 20% of the expenses, right? I think people are starting to realize, right, that as part of the entire experience, right, having a business class seat is also important, right? So why not saving, right, in 4 or 5 dinners so that I can buy a better seat, right, and do something different with my travel experience. So I think people are starting to think more about, look, I deserve that, and that's good. That's good.
Can you get the airplanes you want right now?
I mean, we can't. To be really direct, we can't. We'd love to. I mean, our load factors in September were 90%, 90, right? There's a bit of delay, but I think things are improving, right? I mean, we got good news from Airbus recently, right? We had a plane that was arriving in Q1 2026. They offer us to anticipate, right, to Q4 25. So that's really nice, right? These 321 LRs, our plan was to get 10 in 2025. We got all 10 in 2025, right? We have 7 now, and we have 3 that are coming between the end of November and early December. But it's a challenge. I would like to have more wide bodies today. Yep. I have 120 planes. I could take 20 wide bodies today. Today.
Okay.
So that's how constrained the market is.
So that was the Etihad Airways Group CEO speaking very frankly to Bloomberg's Guy Johnson on the sidelines of the Dubai Air Show. Meanwhile, Emirates said that it was placing an order for 65 Boeing 777X airliners, valued at $38 billion, to renew its fleet of current generation 777s and phase out its Airbus A380s. Emirates President Tim Clark told Bloomberg that his airline would still use the aircraft to serve premium travellers despite any turbulence in the global economy.
Increasing demand of the premium cabins predated all of this. Okay, you could say that with quantitative easing going on at the pace it was, a lot of money was printed. Banks are pretty flush. People are making decisions because inflation is kicking in. They want to get the value for the money now. It could be something like that. Frankly, I'm not altogether sure. There are so many things going on in the global economy at the moment, both economically, politically, geopolitically. You can never be certain what is happening. What we do know, people are getting on our aeroplanes, not just ours, in the premium cabins. You see a lot of the US carriers now attending to premium products because they seem to have been behind the curve anyway, realizing that something has to be done there. So at the moment, it's very good. I can never say, Guy, that this is going to go on forever. The cyclical nature of the global economy, the kind of upheaval that we get for all sorts of strange reasons, whether it be natural, geopolitical or whatever, you just have to deal with it. But at the moment, the going is strong for our part of the world. I'm not going to say that it's going to be the same for the US. I know there's a bit of weakness on the North Atlantic at the moment, but we're not seeing that here.
So that was the Emirates Airline President Tim Clark, also speaking to Bloomberg's Guy Johnson. Well, coming up on the programme, we're going to check in on the B20 South Africa Summit to find out what role sustainability has to play in enhancing trade and market access on the continent. That conversation next. This is Bloomberg. We're bringing it right back here to Johannesburg. We can now head to the B20 South Africa Summit, where we find Bloomberg's Jennifer Zabasaja. Hey, Jen, the importance of sustainability in focus today.
That's right, Lizzie, and it has been an integral part for the B20 to focus on sustainability-related financial disclosures, to help inform investors. And the guest that I'm standing by with right now has been a part of that journey for the B20. I'm standing by with Dr. Ndidi Nnoli-Edozien. Thank you so much for being here, Dr. Ndidi. Talk to us about sort of what you and the team have been focused on in terms of catalyzing more capital and alleviating some of the risk premium that we're seeing African and emerging markets really facing.
No, absolutely. First of all, it's a great joy to be here at the B20 this year, and of course for the B20 to be on the African continent. And how that leans in and connects with the international sustainability standards is that really Africa is leaning forward and on the early adoption journey. You already have 8 countries with roadmaps, and not just Africa, but actually emerging markets. So among the leading countries were Nigeria and Brazil, but also you're looking at large economies like China and Japan, who are leaning in on these sustainability-related financial disclosures that form part of general purpose financial statements. So you have a more holistic perspective on the risks that economies face and countries, entities in particular face, so that when investors are looking at these financial statements, they have a holistic picture that is comparable, that is concise, that is decision useful, and can be used to allocate capital.
What evidence do we have that investors are actually taking this into account when they are deciding where to deploy capital?
Well, first of all, the ISSB is really, first of all, not reinventing the wheel. So the 123 trillion that has formed some prior standards like the TCFD and those 4 frameworks of governance, strategy, risks and opportunities, targets and metrics has become a part of the ISSB. Likewise, recently with the TNFD, who have decided that we are going to essentially become the custodians thereof. IOSCO, the largest convener of capital markets around the world, has endorsed the ISSB standards, only the second set of standards it's endorsed after the International Accounting Standards Board. But most importantly, the ISSB standards are informed by investors. And not just that, we've also incorporated the industry-specific standards, the SASB standards, that are also very much investor-driven. They've also become part of the ISSB global baseline is what we call it. How do we have one common language that investors can lean on to get the information that they require to allocate capital?
How do we ensure, though, that this remains in place moving forward? Because there is still quite a bit of uncertainty that investors are facing right now. What is going to be in place here at the B20 to ensure that this is a continuation of alleviation for some of the risk that these economies are facing?
So, the challenge with risk very often is the distinction between the perceived risk and the actual risk. And when the perceived risk is disproportionately high, you're looking at higher costs of capital for those who need it the most in order to create that transition. So better information enables better information to make better investment decisions. That's on the one hand. Secondly, we really need to lean in on the transition. So one of the things that you've seen very powerfully here is the B20 and the various task forces and the leadership of business across the world, not just in South Africa and across the African continent, lean in with policymakers, for example, integrity and compliance and the anti-corruption working group, which was co-chaired by Brazil and South Africa, that led to the FATF grey listing being lifted. What that does is it creates that public investor confidence, the assurance that there are actually guardrails to make sure that when you do make an investment, that you're sure that there are regulations in place, there's enforcement in place to protect your investment going forward. But very important with all of this is really information. You need information and you need a proper understanding of risks and opportunities, including sustainability-related risks and opportunities. Things like water have become such a big issue in order for you to look to the future and be future fit.
And so maybe really quick, what's the ultimate goal then of this week?
The ultimate goal this week is, first of all, to consolidate everything the task forces have come together with, convene in this country. It's Africa's first G20, B20, and for the B20 recommendations to work their way from business into what the government makes in terms of its one core decision-making forum that moves things forward. I think resilience is a very big issue. Resilience of global supply chains and sustainability plays a huge role in that regard. Trade is really critical. And when you have investments into these economies, what you're doing is you're securing jobs, which is also a huge issue. And of course, you've got the teeming, bright young population on the African continent, and digital transformation was one of the big concerns. From an ISSB perspective, obviously leveraging technology, leveraging also digital to make sure that information is accessible, is machine readable, can be compared, is concise, so that you have a level playing field and capital can flow all across the world, especially to the African continent and emerging markets.
And we know that's been a priority of the South African presidency for this G20. Dr. Ndidi, thank you so much for being here. Lizzie, I'll send it back to you.
So much full coverage from Jen right here in Joburg of the B20 and G20, of course. And staying in South Africa, the country's foreign minister has been pushing back against what he describes as Washington's white supremacist agenda. And we'll turn to that conversation in the final part of the show. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Johannesburg, where South Africa's foreign minister has told us that the world and the G20 will move on with or without the United States, while pushing back against what he described as Washington's white supremacist agenda. Ronald Lamola told the inaugural Bloomberg Africa Business Summit in Johannesburg that the US administration isn't listening because of its ideological bias.
They are not listening because of ideological basis. It's not because the message is not getting across. As you are aware, the DEI views of MAGA, it's an ideological question to feed the agenda of white supremacy. When you look at the program of Afrikaners, that white South Africa, that for you to qualify to be a refugee, you have, firstly, you must be white. Secondly, you must be an Afrikaner. It's a race-based policy, executive order. The Geneva Convention is very clear in terms of who qualifies to be a refugee, must be persecuted and all that. So they don't meet this definition. As someone living a property nicely, not being chased by any army, and then they go into a commercial flight. So all those, it doesn't meet the definition of a refugee. So it's a clear agenda to pursue fear-mongering.
Well, That was South Africa's Foreign Minister Ronald Lamola speaking to Bloomberg's Deputy Editor-in-Chief Reto Gregori at Bloomberg's Africa Business Summit. Well, as we end the programme, let's just check in on these markets again, shall we? Because we're still treading water. We've got futures pointing lower on both sides of the Atlantic. S&P E-mini futures only down about 0.1%. Euro Stoxx 50 futures flat to the downside. FTSE 100 futures notably in the green, only just at this point. And we have the 10-year US Treasury yield extremely steady, not doing anything at 4.11%. But of course, we are looking ahead to those Nvidia earnings. Tom McKenzie is coming up next. He'll be giving us a preview. And that does it for Horizons Middle East and Africa. I've been Lizzie Burden in Johannesburg. Stay with us for Daybreak Europe. This is Bloomberg.